Hi, so in today's video on Ledger to Life, we'll be going through what we do in accountancy. Okay, so in the earlier video, if you have not watched, you could watch where we had discussed on what is accounting and why we need to do accounting, where we discussed on accounting is a process of recording, classifying, summarizing, and preparing the financial statements and interpreting the results thereof. So now, having known what is accounting, now we will go a little deeper on what we are doing in this process. Recording includes nothing but journal entries. So we are journaling whatever the financial transactions has happened. Say capital is invested, then what do we do? Cash account is debited and capital account is credited. So this we call it as a journal entry. We will look into in detail on why the journal entry, why the accounts are being debited and credited in detail in separate videos in future. But now today I'll just tell you the flow or the context of what is being done in the accounting process. Next, once the journal is being cast, the next step is classifying, which means preparing of the ledgers. What are these ledgers? For each category of the account, we prepare and open a account. And this account takes into the debits and the credits which are being made to that particular account. So in our example, if capital is being invested, then we have two ledgers being opened. One is capital account, other one is cash account. Summarizing, which involves preparation of the trial balance. Trial balance is nothing but a statement which has the closing balances. So all the accounts or the ledgers which are being opened are being summarized, and the ending balance, whatever, whether it is a debit balance or credit balance, is being shown in the trial balance. So capital account is a credit balance account and cash account is a debit balance account. This summary is called as a trial balance, and this is a summarization process. Once this trial balance is there, the last step is the preparation of the financial statement, which is the trading and profit and loss account, and a statement which is called as balance sheet that includes assets and liabilities. We will be discussing each of these terminologies in detail in the upcoming videos. However, I thought that I would give you a glimpse on a set of financial transactions and take you through how it goes through the process of journal, ledger, trial balance, and the trading profit and loss account on the balance sheet. Having understood on the process of accounting, I just thought to explain you with the five basic examples on how a financial transaction goes through the process of journal entry, then goes to the ledger, then gets summarized into a trial balance, and then the balance sheet. That is the financial statements. So, if you are new to learning accounting, you can just wait and go through the process so that you get familiar on what is the big picture of what happens in an accounting process, so that it helps you in better understanding in later when we go into the basics of journal entries and ledgers. So for now you can just go through the process how it is happening. So in the journal process, what happens is whenever a financial transaction happens, this is what a journal entry looks like. It has the details of the date, the time, the date on which the transaction happened. Particulars includes the accounts which is being debited and credited, and you have a debit and credit column. And we write something in the brackets which we write it as being capital invested. So which we call it as narration. It includes any other details which you need to include with respect to that particular journal entry. So that is what we call it as narration. Okay, next is we'll proceed with further with the journal entries for each of the transactions. Capital invested of rupees 1 lakh, so I am debiting the cash account, debit to capital account of 1 lakh being capital invested. Okay, for the second transaction, purchase of furniture of 70,000, in which the furniture, which is an asset, so I'm assuming I'm paying by cash, so furniture account debit to cash of rupees 70,000, being furniture purchased. Third transaction is salary paid to employees, salary account debit to cash of rupees 15,000. Okay. Fourth transaction, which is sales made and cash received. So it is a cash sale. That means I received cash. I am debiting cash and crediting sales of rupees 80,000. Finally, I pay salary for another month salary account to cash of rupees 15,000. So as soon as I have I have created the journal entries. The next step is the ledger. So how does the ledgerizing or classification, the form of ledger, actually happen is, as soon as the journal entry is being posted, immediately it goes into the ledger. So cash account to capital, immediately after the journal is being recorded, your cash account is debited and the capital account is credited by 1 lakh. And as soon as the second transaction is being recorded in the journal, it immediately goes to the ledger. So, why is this ledger process actually needed is, it helps in tracking the closing balance at any point of time. Say, for example, I have made a purchase of furniture and I have paid salary of 15,000. Let us assume that the next month I need to pay salary for another 15,000, and I don't know whether I have the cash or not. Whether I have the cash balance to that extent to pay this 15,000, I don't know. So if I maintain only in the form of journals, then finding the closing balance at any point of time would be very difficult. So you need to manually add, okay, here there is a cash, okay, here there is a cash, okay, here I have spent a cash, like that you need to track. So in order to avoid these difficulties in ascertaining the closing balance, we use something called as classifying these transactions of similar nature into one place, which we call it as ledger. This is how a ledger looks. So it is actually a T account, we call it, where you have your debit side and the credit side. You have a particulars amount and particulars amount, and at any point of time we get to know the closing balance. So now the second step is posting them into the ledgers. So like that, I have opened ledgers for each of the accounts which is involved for these financial transactions, and I have arrived at the closing balance. That capital account is having a credit balance of rupees 1 lakh, salary. So totally, once again, the second reason why the ledgers are being maintained is, for a particular transaction, say salary account, in this particular period, I can get to know how much totally I have spent in the form of salary, right? So assume in your personal financing in a month, how much have you spent on petrol? So what would happen is, you need to add each of the petrol bills, and you need to ascertain that, okay, 8k I have spent for petrol. Okay, so instead, if there is a ledger system which is available actually on Paytm, which actually categorizes and tells, okay, totally this month you have spent on petrol is 8k, and it actually mentions totally you have spent on medicine for this month is actually 10k, like that it summarizes, it categorizes and tells, right? That is actually by preparing a kind of a ledger system which is maintained. Similarly, this ledger also tells me what is the closing balance or the total expenditure which I have incurred for that particular category of expense or revenue, right there. Third step is the summarizing step, which we call it as a trial balance. This is the format of a trial balance, which includes particulars, debits, and the credits. So it includes all the details of the ledgers which are being opened and what is the closing balance. So it could be a debit balance account or a credit balance account, but finally the total has to tally. The total of the debits has to tally with the total of the credits. So what does it mean? It tells that arithmetically the trial balance is, and the journal and the accounting process is accurate. It only mentions the arithmetic accuracy and not the accounting principles, because accounting principles accuracy requires knowledge and application. We will be learning in detail about this in future videos on rectification of errors. But for now, this is the third process of summarizing the ledgers into trial balance. Once a trial balance is available, the obvious next and the last step is the preparation of the financial statement. Financial statement, as the term mentions, includes trading profit and loss account, which is an account. So it has a debit and a credit side. It records all the incomes and the revenues on the credit side and all the expenditures on the debit side. Whereas the balance sheet is a statement as on date. So we shouldn't tell a balance sheet having a debit and a credit side. It is a summary of statement having the closing balances of all the assets and the liabilities as on that particular date. So left side we have all our liabilities and the right side we have all our assets. So the trading profit and loss account tells that we have generated a profit of rupees 50,000 for this period, which goes into your capital. So whatever is the profit gets added back to your capital, Why to the capital? Because it is a capital that's being invested in the business and that has created this much profit. So it goes and add back to the capital. We arrive at the closing balance of the capital. And on the asset side, we have your fixed asset, that is the furniture and the cash. Finally, we get a total, and we can see that the balance sheet is tallying. A tallied trial balance obviously has to result in a tallied balance sheet, which obviously once again tells only the arithmetic accuracy. The accounting principles need to be learned in detail in order to ensure that your accounting process is actually seamless and accurate. Share this with your friends if it was a value add on learning on how the accounting process has gone through. If you are someone who is aspiring to have a career in accounting, I'll be coming up in future videos on explaining systems like Tally. Stay connected to this Ledger to Life, and thank you.